Welcome back to another episode of The Wealth Fact. Today's episode is about protecting your wealth because building wealth is only half the battle. The other half is not losing it. What makes a scam work? It's not always about just a lie. It's about the way the lie taps into something deep inside of us. Our greed, our fear, our desire for status, our hope. And the truth is, those things don't go away. They live within us always. That's why investment scams keep happening today. It's not just that we don't know any better. It's that sometimes we want the dream more than the truth. We're going to go over 9 common scams. Let's fill your pocket. First, the psychology of a scam. Scams don't start with a pitch. They start with a feeling. Maybe it's of excitement. Maybe it's of fear. Maybe it's the rush of being on the inside track. Scammers understand this better than anyone else. They don't offer logic. They offer emotions. Returns too good to be true. A secret investment that no one knows about. The opportunity to be first. And the pressure to act now. These psychological triggers are what open the door. And once the door is open, your money walks out. Understanding these triggers isn't just good advice. It's essential self-defense. Because when the heart races, the mind shuts down. So when something feels too good, too fast, or too exclusive, you need to pause, breathe, and wait. Let's get into a few of these scams. The first scam is one of the most iconic ones, a Ponzi scheme. Charles Ponzi wasn't the first to pull this off, but he became the name we all remember because in 1920, he promised investors a 50% return in just 45 days. His secret was international reply coupons, a legitimate postal arbitrage. But the truth is, there was no real business, just a money merry-go-round. Ponzi wasn't making profits. He took money from new investors to pay off earlier investors. And as long as people kept investing into the company, it looked like it worked. On paper, people were getting rich, but underneath, there was nothing. Just hype, and eventually it all burned down. Bernie Madoff used the same playbook nearly a century later. Madoff ran one of the largest Ponzi schemes in history, worth over $65 billion. He wasn't just some internet scammer in his basement. He was a Wall Street legend, a former NASDAQ chairman, and had built trust over decades, and then shattered it all in an instant. Ponzi schemes thrive on complexity, on exclusivity, on scarcity. They often use technical language, obscure investment strategies, and name-dropping insider networks. But when you break it all down, there's one core truth. If there's no actual product or service generating value, the scheme is unsustainable. Ask yourself, how can I see this investment actually making money? Can I verify these claims through a third party or auditors? Are there any tangible assets or operations involved? But if the answer is vague, or worse, if they don't exist, then what you're looking at is an illusion, not an investment. A real investment has substance. A scam has speculation. Don't get dazzled, get clarity. And if the answers aren't clear, walk away. You're not going to miss out on anything. Next, a pyramid scheme. Yes, they're still happening today. They're usually disguised as network marketing or affiliate business models. And here's the thing. Recruiting others into a business isn't illegal on its own. But it's when recruitment is the primary or the only way to make money in the business. And that's dangerous. At a first glance, pyramid schemes can seem legitimate. They often start with a low buy-in amount, maybe $100, $500. You're told that you'll make that money back quick by bringing in just a few more people. And then those people bring in a few more people. The promise is clear. Build a team, climb the ranks, and the money will flow in. But if you look deeper, are the products being sold to actual customers outside of the network? Or is everyone just buying into the promise of future riches? These scams are mathematically impossible. They require exponential growth. Every new layer needs more recruits than the last one. Eventually, they'll hit a wall and the pool of new recruits will dry up, the money stops, and the bottoms start to fall off. The early adopters, those at the top, might make their money back, but everyone else, they're left with nothing, or even worse, with debt because of the investment. If a business opportunity emphasizes recruitment over product sales, if the compensation plan is a maze of bonuses tied with signing up others, and if there's more hype than substance, step back. That's not a real business model. Next is a pump and dump. Have you ever seen a tiny, obscure stock suddenly explode in value after a flood of social media hype? On Twitter, Reddit, Discord, everyone's saying buy it now, it's going to the moon, it's a startup, it's a pump and dump scheme. Here's how it works. The scammers buy large quantities of a low value stock, often a penny stock with low liquidity. Then they create hype, fake news articles, bots pushing the narrative. Influencers sometimes knowingly start sharing and spreading the word. The price surges, and as soon as the buzz reaches a peak and average investors start buying in, the scammers start to sell. They cash out and the price plummets. Everyone else, they're left holding the bag, watching their investment disappear overnight. The lesson? Don't chase the hype. Don't invest based on your emotions. Always do your own research. If a stock is up 300% in a day, ask yourself why. Another one is advance fee scams. These typically go, if you just send a small fee right now, we'll release a big payout. That's the line, or some variations of it, and is the backbone of the advance fee scam. You're told you've won something, an inheritance, a grant, a once-in-a-lifetime opportunity. All you have to do is pay a small processing fee. Maybe it's just $100, maybe more. You just need to wire money over, and then they'll ask for another fee, and another, and another. And by the time you realize it, it's all a scam, the money's gone, and so are they. These scams prey on desperation and hope. They flourish in inboxes, DMs, even fake investment platforms. But here's the golden rule. Legitimate investments don't require upfront payments to be unlocked. Another one is crypto and Forex frauds. Crypto and Forex can be real investments, but with great hype comes great fraud. Scammers create fake platforms, fake websites that look professional, complete with dashboards that show fake profits. You log in, you see the growth, you get excited, but when you try to withdraw your money, suddenly there's a problem. More verification needed, more fees, and then silence. In Forex scams, it's the same story. Promises of AI trading bots, secret strategies, guaranteed wins, but behind the curtains, there's no trading at all. Protect yourself by using only regulated platforms. Read real reviews and always test withdrawals as early as you can. Because if you can't get your money out, you were never investing. Another one is impersonation scams. These scammers don't come with ski masks. They come dressed as people you trust. They pretend to be your bank, your investment advisor, the IRS. They spoof phone numbers, forge email addresses, and mimic other things perfectly. They might call you urgently, claiming suspicious activity on your account, or email you a link to verify your identity. But remember this, no legitimate institute will ask for your personal information through a cold email or unsolicited call. Never give sensitive information never give out sensitive information to inbound requests. Instead, contact the institute directly using an official phone number. Enable two-factor authentication on every account. Another scam is boiler rooms and unregistered securities. Picture this. You get a call out of nowhere, and a charismatic voice is pitching you an exclusive investment. It's not available to the public, they say, but they think it'd be perfect fit for you. This is boiler room territory. High pressure sales operations designed to take your money. They push hard, they push to flatter you. They'll throw around big numbers and limited time offers. But here's what they won't tell you. Most of what they're selling is unregistered, unaudited, and unverifiable. Legitimate investments come with paperwork, with disclosures, with oversight. Take your time, ask questions, demand documents. If they get defensive or evasive, just hang up. And the last one is social media scams. You scroll through Instagram and see a wealth coach leaning on a Lamborghini, a TikTok trader flaunting screenshots of six-figure days. But here's what they don't show you. They rented those cars, they photoshopped their bank accounts, and they have fake testimonials. Social media has become the perfect hunting ground for modern scammers. Why? Because perception is easy to manipulate. You can rent a luxury apartment for a day. You can lease a Ferrari for a weekend. You can buy followers and likes. And with a few flashy posts, suddenly they can look like a millionaire even if their bank account is empty. Many of those so-called wealth coaches or crypto experts are paid promoters. They take money from sketchy startups to hype junk tokens or investments. They run a pump and dump scheme using Telegram groups, Discord chats, Twitter threads. Once enough followers buy in and drive the price up, the scammer cashes out and leaves everyone behind. And here's a few common social media scams. Fake giveaways, which are send one ETH and get one back. These are often hacked accounts of real influencers or celebrities. Forex and binary options mentors. They'll show screenshots of supposed gains, then offer to trade your money for you, only to disappear once the deposit hits. Impersonation of trusted brands or people. Cloned accounts pretending to be major platforms or well-known figures, directing you to links or fake investing apps. Paid Discord or Telegram groups, where the real product is FOMO and hype, not financial insight. Don't be fooled by followers, or flash, or fast talk. Real wealth is often quiet. Smart investors don't scream. They analyze, they research, they ask the hard questions. So next time a crypto bro slides into your DMs, or a millionaire mentor wants to show you the secrets to their success, ask yourself, if they're really making six figures a day, would they spend their time pitching to strangers on Instagram? Here's a few universal red flags. Scammers evolve, but their signals rarely change. What they follow are these universal red flags. The patterns that should always raise red alerts. If it's guaranteed, it's not real. No legitimate investment can promise a return. Markets move, risk exists. Guarantees are what scammers use to lure you in. Because it sounds safe, but it's not. It's all a lie. If it's urgent, it's a trap. Pressure is a tactic. They want you to skip your due diligence, to buy now because there's only 2 spots left, or these windows close tonight. Real investments give you time. Scammers rush you. If it's vague, it's probably a scam. Money loves clarity. Scammers thrive in fog. Final thoughts. Scams exist because the dream of easy money never dies. But you're not here for easy money. You're here for real wealth. And real wealth is built slowly, carefully, and deliberately. You don't get rich quick. You get rich smart. Protecting your wealth is just as important as creating it. Until next time.